Welcome to the Sharkpreneur podcast with Kevin Harrington and Seth Greene. Kevin Harrington is the inventor of the infomercial, one of the original sharks from the hit TV show Shark Tank, and has generated over $5 billion in TV and digital direct response sales. Seth Greene is the world's first trusted authority on cutting-edge direct response marketing, a best-selling author, and the only 3-time Marketer of the Year nominee. On the podcast, Kevin and Seth interview sharkpreneurs who share straight talk on what it takes to explode your business.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com. Welcome to the podcast. This is your host, Seth Greene. Today, I've got the good fortune to be here with Chris Van Dusen of Solyco Capital. Chris, thanks so much for joining us.
My pleasure. Thanks for having me.
Our pleasure. So Solyco is a unique private equity group that delivers capital solutions for late-stage startup and growth companies. Let's go back in time a little bit. How did you get started?
Well, it's a funny story. I'll try to make it semi-brief, but grew up on the East Coast, was not in venture, but was in finance after college. I had the dream of playing baseball, which about sophomore year in college kind of went away. So nice thing is they can't kick you out of school if you can't play your sport anymore. So I graduated from William & Mary with a degree in economics. Started in sales, went into finance, was a wholesaler, for those who may know what that was, for years. Came out to California, company I came out for, no longer. They went bankrupt about 75 days after I moved to California. So weather's a lot better than Williamsburg, Virginia here when I moved to Newport Beach. Cost of living very different as well, though. So ended up becoming what I'll call the accidental entrepreneur, when you all of a sudden are in a new city and 75 days later, you're laid off. You kind of have to figure out what the heck you're going to do. And so I ended up starting my first company with my wife about 4 months into dating. And then back then to a marketing firm. She started a firm, I started a firm, met these guys, and we ended up starting what ended up being the second largest CBD brand in the world. This was beginning of 2017. We scaled that up, sold it in 2021 to a publicly traded company. At the same time, kind of between this 2017 and 2021 time, my wife and I also co-founded a liquor distillery, and we sold that in 21, and then built a beauty care line in the CBD space, and we sold that to my own company, funny enough. So I like to say I had 3 exits, more like 2.5. Right, because the other one was kind of an inside asset swap. And so had those 3. I raised 2 funds in the cannabis space as well during that period. I was really focused on picks and shovels. So the idea of ERP systems, analytics companies, things that didn't deal with the underlying commodity. And so that period was amazing. But also at the same time in 2017, I met this gentleman by the name of John Garcia. Now, John founded Solyco Capital back in 2017 as well. Solyco was an investor in one of the deals I took full cycle, but John and I really just became friends. And after my last transaction in 21, asked me if I'd join the firm as a senior partner. And so if you kind of look at the scope of what I've done, it's always been around, diligence, investing in companies, raising capital, pulling levers of growth, because I always sat in that chief revenue officer role, even though I'd be a co-founder, to scale businesses, and then had the 3 exits. So it kind of uniquely gave me the experience to be a venture partner.
Well, congratulations on all of that. The longer, I know that was the brief version. I'm sure the longer version could fill a book somewhere. It hasn't already. So tell us a little bit about Solyco and what you got, the expanded version beyond the 1 sentence I used to introduce you in terms of what you guys do.
Sure. Different stages in what I'll call the capital supply chain, right? From angel investing to traditional institutional venture, private equity, and the likes. We kind of sit between the seed round and B. So the companies we like to invest in, already have a product produced. They have signals of product market fit. They're in revenue traditionally, and need capital to scale. right? On the early side, that would be seed, and on the later side, obviously the B rounds, right? Higher valuations, a lot of the execution risk is taken out, and they're really kind of scaling for the future. Where we're different, however, is most venture, you have a few general partners and a few staff. You raise a big fund, or whatever fund you have in your mandate, and then you deploy that capital. For us, we have a few of us that really kind of take those venture roles, right? Raising capital, finding deals. And then we have this amazing team that really are running a management consulting firm we call Solyco Advisors, that we can help these portfolio companies during this formidable time in their growth cycle, right? The seed through B. Most companies don't have fully baked management teams. They don't have fully baked, staffing for departments. And so traditionally when they're raising capital, it's to acquire, full-time employees, right, on the operating side. And so we're able to deploy teams, if needed or desired, into these companies to help them scale. So very different model. We're all ex-operators or, ex-C-level execs at big Fortune, 100, 250 companies. So we have this knowledge and experience as proven operators. And quite frankly, our interests are aligned. We're already on the cap table, the capitalization table. We're not looking for a job. We really want to do what's best for the management team that's there, the founders, as well as the company and our investors. So we're there moving things forward, interest aligned.
That's awesome. Who is an ideal acquisition candidate for you?
Yeah, so what's really interesting about the firm is we're industry agnostic. What's great is you do have 11 partners with different experiences and different views from different sectors. So we'll take and look at a lot of different things. As I mentioned, instead of traditional venture, they go raise this big fund and then deploy against a mandate, call it AI, industrial manufacturing, ESG, whatever it may be. We look and find great platforms, great products, great companies, and then bring capital to bear to those. So, we're not on a time frame to deploy capital, which has, certainly been an Achilles heel to venture over the last few years, is finding great deals at great valuations to deploy capital. For us, we'll go find those deals first and then match capital instead of sitting with a bank of capital, just trying to find deals that match. And so it's made it the last couple of years very different, I think, than the traditional industry of venture.
Yeah, it's not like you've got this whole bunch of Tinder and you've got to find a place to put it. I like that you're waiting, you're patient. It sounds like you're almost waiting to find the right deal first. And then you're going, once we have this, now we're going to go get the money for it.
You got it. You got it. And because we're doing earlier stage investments, right? On the small end, probably $500,000 checks, and on the larger end, a few million. That capital is a little easier to go out and raise for than it would be if we were doing later stage $40, $50 million tranches of capital into companies, where having a dedicated, captive pool makes more sense.
So then how does that work? If you are not like a quote unquote regular fund, how do people invest? Obviously, we're not making any direct solicitations to invest on this podcast. Standard disclaimers apply. But how do you solicit capital? How do you deploy? How does that investment process work?
So we like to say we're invite only. We have an amazing group of limited partners that we work with, and that is certainly expanding. And traditionally, those referrals come through our existing LP network, right? Limited partner network, as well as a few of us that are out, meeting people and having conversations, bring to bear. How our products are set up is as just that, products. Think of it that way instead of funds, right? They were SPVs before, now they're SEC registered products. So you can see the actual companies that are in our offerings. Today, we have a product, has 11 companies. You can see their capitalization history, you can see their forecast, talk to the CEOs. It's very different than raising against an idea or a thesis and then saying, we'll let you know the companies that find their way in the portfolio. Right.
What are some of the industries that you guys have had good results in terms of acquiring?
Yeah, so when you look at our early stage investments, they do range. We've had some now from early on in 2017 in biotech and industrial manufacturing. One great one, Palatronics, is in the pallet space, right? Moving the world's goods around, but they're smart pallets, and it's a really fascinating technology play as well. Recently, we've brought in an AI company. Funny enough, I said I would never invest in AI, not because I don't think it's an amazing category. I like to say I don't know enough. I don't know what I don't know on which language model or middleware platform is going to be the one, du jour here over the next few years. But this company, AI.io, took a very ingenious way of applying AI practically to the business of scouting and player development for sports. And so that became a very interesting one. And they are on a tear right now, working with a lot of the major leagues, in the US and internationally, especially in the soccer or in Europe football space. It's amazing. You can have kids, if you think about how scouting works, you have kids in India, Senegal, anywhere in the world uploading these videos, which are essentially indexed against maybe the best striker at Chelsea or other kids the same age in their developmental programs. And so you've really democratized scouting across the world, because if it's not for someone in a white coat showing up to watch you play, there's probably not a chance that you're going to be seen. And this allows everyone to be able to be seen, ranked, and then, kids all over the world are getting invited to developmental contracts because of it.
That is really fascinating and not something you'd necessarily think of every day. Who's an ideal investor for you?
Yeah, we deal with high net worth, ultra high net worth, and family office. That is the traditional investor we have today. Some, more institutional capital with foundations and endowments, and pension funds, but really the majority of it is in that kind of high net worth through family office.
And on the high net worth side, they have to be an accredited investor?
Yeah, accredited and or qualified, depending on the product. We have a debt product, which does not necessarily need the accredited investor side. It's just straight debt with a nice, simple interest return. And then the other side on equity, then yes, they're accredited and qualified investors.
And then how does it work in terms on, do you have a standard time horizon in terms of after you acquire when you're looking to exit? How do you help them get to that point? Talk a little bit about the post-acquisition re-exit process.
Yeah, for us, most ventures going to run in the 5 to 7 year plan. That's what they'll put in their funds. That's what everyone's looking for. It gives a nice time. We'd like to fit the same, but a lot of ours, depending on when we come in, have the potential to exit earlier than that, right? And we have our forecasts against that. And then others, we have one that's a great licensing play that may go well past the 5 to 7 year run, but from a DPI, a return of capital to the investors, it becomes the potential for an annuity long term of continuing to receive essentially licensing dollars against that investment. It all depends on which investment it is, and for our investors, taking a look at what they desire. Right? Are they looking to flip it quicker? We may have some companies that match that. But I would say traditionally we'll follow venture at the 5 to 7 is what we're going to forecast and look for.
That makes a lot of sense. How many acquisitions have you guys done since inception?
Yeah, from an investment perspective, we've done 34 individual companies. Again, we're kind of the range of industry at this point. What we love to do is be the capital partner through those stages. So if we can identify companies at the seed range, we certainly would love to lead that if it makes sense, and then be your lead through A and B, be your capitalization partner. After that, again, the size rounds become quite large. And so it doesn't mean we won't participate, but traditionally, there's some, I'll call bigger fish that comes in and does that much larger investment. But we like to be the capitalization partner, from the seed round through.
You've achieved so much success for your company and your portfolio companies and your investors. What's your biggest challenge now?
Continuing, right? Because it's a business that never stops. What's amazing is, and I'm a huge fan of the entrepreneurial journey in general, the good, the bad, the sideways. There's always great entrepreneurs who have great new innovative companies they're coming out with, and we love to be there to support, right? With mentorship, with operating rigor, and certainly with capital. Is new companies are formed every day, new things achieve new levels of success every day. We want to be a part of those journeys.
That is beautiful. Your passion is obvious. What do you like best about what you're doing?
So back to the entrepreneurial journey one, I get to sit with amazing founders, listen, learn, right? You can't be in this business and not be extremely curious, because you never know. Someone will come with the most harebrained idea, right? At least on surface. And when you sit and unpack, they're just ahead by 2 years, 3 years of where the things are going, right? There was a great quote, I forget. In venture, no one gets mad about the investment that they made and lost in our business, but they get mad at the money they didn't invest because they couldn't see it.
Yeah, the one
and missed out on. Because one's a binary transaction. I take $1, I put it in your company, maybe I lose $1, or even more likely get $1.10 back after 5 to 7 years, right? You're bummed. Even worse though is saying no to putting in that dollar and missing out on $17, $20, $30 back. The quantum of actual loss is much higher. And so it's really being prudent at picking. That's what gets me excited, is hearing those journeys and trying to see what these founders see and are so passionate for. And then 2, on the capital raise side, which is a huge function that I do within the firm, I get to meet amazing people and hear their kind of postmortem story of being an entrepreneur and going through, right? Their success. And so it's amazing to be surrounded by both sides of the ecosystem. You can't not be excited.
Absolutely. Well, that is awesome. We know your time is incredibly valuable. We greatly appreciate you spending some of it with us. For our folks who are watching and listening and want to learn more, where is the best place for us to send them to learn more about you and the firm?
Yeah, firm is solycocapital.com. Nice and easy. You can see it right behind me, I believe.
Yes, and for those of you listening, it's SOLYCO capital.com, and we'll put that link in the show notes.
Perfect. And then LinkedIn's a great place as well. It's my full name, Chris M, as in Michael Van Dusen.
Awesome.
Not to be confused with the other 2 Chris Van Dusens, who are producers and a children's illustrator.
Which you are not.
Which I am not.
All right, folks. Well, make sure to include that M if you're looking for Chris on LinkedIn. Chris, thanks again for joining us.
Thank you very much for having me.
Thanks, everybody, for watching or listening. We'll talk to you or see you next time.
Why do so many businesses struggle while others seem to explode overnight? Do you wish you had the secret to this type of exponential growth? Now, I've scaled more than 20 businesses to over $100 million, and it's not just luck. In my new book with Mark Tim, Mentor to Millions, you'll learn the repeatable framework I use in all my business ventures for massive success. Order at kevinmentor.com and get over $1,000 in bonuses. Head to kevinmentor.com.